Just stopping in for a quick update on this FTP. I just finished day 4 because I started on Wednesday. Yep, so Wednesday, Thursday, Friday, Saturday, Sunday, and then this Monday. This is the 4th day, and today is a down day at $97.36 on 2 trades, which we'll review in a second. And this is the first down day, and this is why I have the spreadsheet open. It's the first down day, significant down day if you don't include this minus $7.29. The first significant down day in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trading days, or just about 2.5 weeks. So that's my longest winning streak in recent memory, at least, and I'd guess in about a couple years or so. And we'll talk about that in a second because I've made some adjustments to the spreadsheet. So the FTP currently stands at, while we're waiting for it to load, I'll just show you what I have up here. Win streak in dollars. So this is like the drawdown but on the flip side, so it calculates the maximum accrual of equity before seeing a loss. So it's different to drawdown in the sense that you don't have to pass a peak high. Drawdown has to pass the prior high in order to measure the last drawdown, whereas this just measures a run of successful trades, and when that's broken by a loss, it resets and starts again. So you can see here it added up these profits on these trades here in this column B. You can see 56.32 plus 86.32 is 142 and some change, 11 odd, 153, 101, 255, and so on until it's broken by the loss, and then it resets. So if you go down this column, you'll see that here's a big run here where I just kept accruing gains, kept seeing new equity highs, hence the zeros here on the drawdown column. Then that was broken Friday, by a loss, and then we started a new one, a new run or attempt at a winning streak here, which I've broken today with 2 losses again. So let's go over to here. So this is the gain, the cumulative gain of the combine and the beginning of the FTP as of Friday. So you can see the combine I finished at just above 1,500, and then on Friday I was up 268-ish on the FTP, and I've since given back 97.36. So that leaves me, after 4 days, that leaves me on $170.49. It's really not that useful to do the calculation I'm about to do, but just for fun, let's look at the pace I'm keeping now. So $170.49 divided by 4 gives us the average gain per day, and then if we need this number of this amount of gains, we have to see how many times this goes into 1,500. So let's remember 42.62 and a quarter. Divided by, well, it's up here so we can see it here, divided by 42.6225, and at this rate it would take me 35 and a bit, so let's just call it 36 trading days. It took me 49 for the combine, so in these first 4 days, again, it's not very indicative of anything because it's just 4 random days. But as the sample size gets bigger, then we'll get closer to the true value. But for now, the pace is 35, 36 days for the FTP as compared to the 49 that I ended up doing the combine in. So that's that. And now I guess we can review. Let's have a look at this spreadsheet. I've put the winning streak in here. Here's the code that I've used, that I've brought over from equity charts, this sheet, one of the 5, 6 sheets in this spreadsheet. So that means quite simply that I made $749.45, risking about $50 or thereabouts, as you can see here, per trade. So a run of 15R times my risk, 15 times my risk without enduring or without taking a losing trade. And then this is the max drawdown, which most people will be familiar with. It's basically the maximum drop from an equity high before taking out that high, and that is $583.05. So, and I guess just to finish it off, we can look at the equity curve as well. Where is it? Up here. That's what it looks like. Now you'll see this tick down by, a bit twice as much as this, because I've taken 2 losses, so we'll be around here. But that's an awesome breakout from 1,000. So just like a chart, just as you would expect, it gave way at the big whole number after chop, and we've just trended straight up. It's only natural that at some point there's going to be chop and a slight pullback or a sideways to slightly down chop. So I'm expecting that, and I'm not really bothered by this losing day. I'm tempted to go on, but I'm going to contain it and try to keep those losing days as they've been, which is over here. Every one of it must be around 19 losing days now. Every one save one is around $100 to the downside. So I'm quite happy to trundle along and just keep that trend going. So if tomorrow's 100 down as well, that's great. I just settle in, make sure I'm not doing anything wrong, and continue doing what I'm doing. So that's that. And what else did I want to talk about? The trades themselves, the spreadsheet. That's what the scorecard. Sorry. An interesting fact. Again, it could be coincidental, but since employing Don Miller's a modified version of Don Miller's performance scorecard, which you can see here, I'm now. This is the 5th week I'm using it. The first week I only started using it on the Thursday, so I recorded Thursday and Friday on the first week. Then I had 3 full weeks, ending with the 3rd full week last week, and now this is going into the 5th week now. And in the last 3 full weeks, I've had my best performance in, quite frankly, perhaps ever. Like, I'd have to go back and check, but if it's not the best performance of my 10 years and 10-month career, it's definitely way up there. It's within the top 3. And so it could just be a massive coincidence, or it could very well be that the performance scorecard is helping me to focus on the right things. So it's something I'd recommend you look into if you're struggling or you want to improve your game. Time will tell. If in another 3 to 5 weeks, when I've completed another 3 or 5 scorecards and the trend is similar, I'm not expecting to have such a brilliant run as I've had recently, but we will be able to look back on the chart and see, pull up the chart up to the point where I started using the scorecards, and then look at the data after, once we've accrued 50 more trades or several weeks. Best to go by trades rather than weeks. Once we've got another 100 trades on here with the consistent use of the scorecards, then we'll be able to draw some real conclusions. But I like the way it's going for now, so I'm going to continue using it. Like, if it's not broken, don't fix it. So and as I said before, when I introduced the scorecard on a previous video, you can pause it and have a look at, these are the definitions of these things you see on the left in column B. I've defined them over here in these merged cells here, so that I'm always basing my decision off of this, whatever I've written here, to try to stay consistent with the way I record the data. So as you can see today, I've got some subpar performance because I had a horrible episode last night to do with racism here in Italy, but that's another story. And so my focus and energy level was off, my sleep was off because I didn't get to bed till late, and my trade desire was low as well because I was apprehensive. And usually I'm pretty good at adjusting to changing, or I've become since employing this scorecard. I've become much better at adjusting to changing expectations because the scorecard showed me that that was my weak spot. So I directed my focus to that, and I've improved in recent weeks. But today I took a step back, and it's moderate as opposed to strong because, and this no regrets is tied to that trade. So let's have a look at that. It's this gold trade here. Up until this point here, where you saw, up until this point here, I needed to go in long 67.6. Now, if I took into account this shooting star here, I would need to back off and wait for the market to gear up again to give me a 67.6 long, and I didn't. And that's why I've got this as a lighter shade of green for moderate rather than strong, because I should have backed off there. But once I had committed, and this is a cognitive bias called the sunk cost effect, if you want to look it up, the sunk cost effect. Once I had committed to my decision, I was inflexible in the face of new market information. And so as here you can see it says, was I able to be flexible in the face of new information? But I'm in two minds of whether to even go lower and put this modestly positive. In fact, I think I'll do that because I really should have seen that coming. So I'm going to go err on the side of safety and go one lower. And that's because when I saw this candle, I really needed to pull the order. I didn't. Got in here, and as you can see, if we go along, if once it geared up again, I should have put my 67.6 on once more here. And at this stage, I had already taken one loss. I had taken this loss, and I was looking to get into another trade, so I didn't put on a second contract here because I knew I didn't want to go under $100-ish down on the day. But if I had more leeway, I could have put on 67.6 at this stage, and then as you move along, you'll see that that got hit there, breached it by a tick eventually, and then went on to the 69.1 target, which would have been a 3R gain. But that wasn't to be. As you can see, it tested that area numerous times, then took off, and now it's trending higher from there. So the overall premise was good, but the timing was off because I didn't react to the new market information. That's GC, and then we had YM. Was there a trade on YM? Let's see. I'll pause the video because it's getting a bit long. YM would have chopped me out at the lows here at 40, so I guess it's fortunate for me that I didn't continue trading today. And then 6C, right idea again, but just too soon. Didn't do anything wrong with this trade. And as you can see, it took off here. I went long here, and we've since had that run up, but that's a good trade. And 6B was the big miss of the day. I was looking for 52 long. I was a little hesitant after the events of last night and ended up not getting this trade from 52. I would have got out at 80 for 2.8R. So I do have some regrets on the day, namely on not taking this long from here at 52 in 6B and not reacting to the new market information within GC Gold. As you can hear, the kids are screaming now, so I think that's my cue to go. And I'll be back with another video in the near future. So that's it for now. Sorry this video is a little bit long, but I just wanted to cover off where I am, what I'm thinking and stuff. I'll try and make the future videos a bit shorter. That's it for now, and catch you in the next video. Bye for now.